Okay, so this is the bull and the bear, and right now what we're looking at for specifically this segment is going to be SPY or SPX and also the IWM and the Russell 2000, which same thing. But essentially what we're looking at with the bull and the bear is we're trying to define what is the bull argument for a stock, or in this case an index, and what is the bear argument. And we're going to look at both sides of that so you can understand where the risk really should be for you personally and what would be the best decision for you moving forward. So right now we're going to focus on SPY, and then we're going to get into the IWM and kind of like relate the two and kind of see where there could be potential relation on if there is any synchronicity or not between these two indexes in the near term. Now right now, if we're looking at the SPY, we're sitting right around the 600 level. We're just above 600. And all these lines you see on my chart, these are all basically support and resistance levels. I call them LOIs, or we call them LOIs, or community over exclusive trading. And essentially they're levels of interest where you should see volume react, where you should see some sort of interaction. When there's a space like this, a good gap, that typically means there isn't much volume there isn't much interest. Now, there obviously are going to be levels in here that are important, but at least for what I look for on the daily, there's not much in this area, specifically on the SPY, that really interests me too much. You may have a different viewpoint, totally fine. But for me right now, being north of 592.65 and south of 601.92, and obviously the 600 level, which I don't need to put a line on the chart for, is an area in which there's a lot of flux, where there isn't necessarily a lot of confidence either which way, especially if we don't see volume come through the tape. And we've actually seen volume been kind of dipping ever since basically 6/6 last Friday. You look down here at my VMA, so that's your volume moving average. We had a nice little pop on day prior on 6/5, and then the VMA came down 68 million. Yesterday was 66 million, and today's obviously not done yet, but we're starting to see a little bit of a volume decline, which is a little concerning, especially with how these daily candles look. They're not very promising, and the fact that we're heading into this obvious psychological resistance at 600, and the fact that I have another area up here at 601.92. So here's your bull and the bear. Bull case. What I would like to see at this point, where you actually have a decent RSI, and as I personally use RSI, it is a bull or bear momentum. It shows me where the momentum is in the market. It doesn't show me overbought or oversold. And my line in the sand is 54. It's that simple. If it's above 54, it's maintaining bull momentum. If it's below 54, it's not necessarily bearish, but it's depending on how low it is, bearish momentum or neutral momentum, or there's no momentum at all, obviously. And right now we're at 65, 66 area on your RSI on the daily, which is indicative of bullish momentum. Good to see. However, as I just alluded to, volume's a little bit lower. So if we do see volume kick up, we do have a few things working in our favor here as a bull, where we have the momentum on our side. Your MACD is actually starting to curl back over, so it's showing that there could be, on the daily at least, there was a level of a cool down, which if you've been watching the program, we saw this area of consolidation here for about a week or two before getting this low volume breakout. So getting that little area of consolidation there allowed things to cool off before we could potentially get this MACD flip to push to the upside. And also knowing that the 601.92 level here is a resistance. However, if we can break that level with increased volume, you actually are set up here pretty good on the daily for a technical breakout to break into this area in which there is more volume, so there should be more price interaction, right? There should be more price discovery. Bulls should start to push this even higher. Not to mention, we're not too far from all-time highs here. Believe it or not, we're only about 11 bucks off of all-time highs here. I know it doesn't feel like it for some reason, but we are pretty darn close. Going back to looking at the weekly here, we actually had a pretty hard fall, obviously due to the tariffs, moving back to the upside, kind of like a V bottom on the weekly. And your weekly here, you're kind of set up as a kind of really disgusting cup and handle, a very narrow cup and a tiny little handle here on these two little candles here breaking to the upside. Again, very minimal. It's if you shrunk down the photo of what a cup and handle could look like, but that's kind of what this price action looks like to me, where we had a sharp decline, we came back up, creating like kind of a slope, so to speak, a parabolic nature there, cooling off as we talked about with the daily chart before a rally. So letting that bull move cool off before getting another leg up, which is really what you want to see as a bull. The other thing I want to highlight is that monthly SAR. So that stop and reverse indicator, your SAR indicator, on the month is at 607.74. So breaking that level, 607.74, could be massive. If you go back in time and you look at your chart here, this is the monthly chart on SPY. Every single time it's broken, that monthly red SAR has a minimum rally from peak to valley, so from that break to the top, minimum rally of at least 70 points. That's throughout time. So even if we go all the way back here and you pick up a red SAR break there, down here, wherever, this is really tiny, but you pick up a red SAR break down here, and even when the SPY was trading at 80 bucks, you got all the way up to right around here. Okay, in that case, it's 30 bucks. So I went too far back, but let's go back somewhat reasonable. Let's go to, all right, 2011. We broke the red SAR here. We were trading at 103. That was a pretty decent rally. Got all the way up to 181, 70 points. Broke it to here on 1030, trading at roughly 178. Rally, rally, rally. Got all the way up to 265. So you get my drift. Go back and check me. So from 2011 on, we got at least a 70-point rally, and obviously as the price of SPY appreciates, even a 70-point rally is fantastic. So we're not even looking at percentage. I'm just looking at dollar amount. So obviously as the price of SPY appreciates, that percentage rally, theoretically, if it kept at 70, would be smaller, but it still leads to some strong bullish potential momentum, which is what we want to see. Now, going to the bear side of things. So if we're looking at the bear case for SPY, let's get back to where we were. And I already talked about this, but we'll bring it up again, looking at the volume of SPY. It's something very concerning, the volume in these daily candles. These are not really super strong daily candles. This is not indicative of like what I personally want to look for a strong breakout with momentum to the upside. Especially these last two doji-esque daily candles are indicative of indecision. It's showing that there isn't a clear motive on which way the market wants to go. You swept the highs, you swept the lows. You swept the highs, you swept the lows. Both days in a row, really. Today, so far, we have an okay daily candle. We just broke 601. It looks like we're trying to push to the upside. But for these 3 days here, or 2 days here, not too great. Now, if today, especially if we close for a daily candle or even a hanging man candle, some sort of candle showing bears could be stepping in, I actually might turn short-term bearish. I say short-term bearish because getting a push down to 596 is very likely, and getting a flush all the way to 592.65 just as likely, at least in my opinion, short term. Now, a little bit longer term, if you're more of looking for the bear case, you want to see that momentum start to shift on the daily, getting near that 54 area, but that wouldn't happen until we get back in here. And in this area where we already consolidated is a decent support range for SPY. So near term, I think bears could have a trade here. Like I mentioned before, that's obviously the 600 area and the 601.92 if it doesn't break, especially if volume is lacking. Short-term bears could have an advantage here. Now, longer-term bears, what you're going to have to look for here is basically getting south of 586.12-ish. It's going to put you under the POC for this defined range. It's going to put you at the bottom of this chop, or I'm sorry, under the middle of this chop range. And depending on how volume looks at that point in time, if you do get a crack of this 581 and ultimately 576.70, you have this obvious gap to fill, but there in this area, there's not a lot of room to catch you. So if we do break these few decently strong supports, albeit getting into 550s or even down to, actually, I would say 550s. Mid 550s would be very realistic. Now, I will say, as I said at the beginning of the program, if you're watching this live, I'm leaning more 75-25, meaning I'm 75% more bullish and 25% bearish. I think bears could have a short-term trade here, but longer-term risk-reward doesn't really favor the bears here. You'd have to see a few key levels crack and go before you could be more like longer-term bearish. But there is a trade set up here for short-term bears. Now, that was the bull and the bear for SPY. Let's flip it on over to IWM. IWM is a little bit more interesting. So if you watch the Adam Cash Angle, the program, we talk a lot about how I like to use IWM as a sentiment driver. Kind of gives me an idea on retail. I know it sounds a little silly, but these are your small and your mid caps, and it gives you an idea of how money's rotating. Is money coming out of bigger names and going into more growth names, more risk on, right? When we see more money go into the Russell, in general, it's showing that there is more of a proponent of the market taking more risk on. They're willing to take more chance because you got to think that a lot of these smaller companies, they are growth companies. They may or may not make money. They are story stocks. So there is a case there where some of these smaller to mid-cap size companies aren't necessarily profitable. other thing you want to keep in mind that a lot of people don't talk about the Russell, and probably why you shouldn't invest long term in the Russell, all the good companies from the Russell go to the S&P 500 because they get big enough, they get too big, and they're no longer valid to be in the Russell, right? And they make enough money that they're no longer valid to be in the Russell. They get their market cap grows so large that they get taken out of the Russell and something else gets thrown into the Russell. So all the good companies are eventually rotated out of the Russell and put into the SPY, essentially, right? So that's why you never, at least in my opinion, want to hold IWM or the Russell like long term, unless your goal is more of like a trading instrument, or for me, either a trading instrument or a sentiment driver. Unless your goal is to get some mid-term growth exposure. Again, looking like risk on. So with that little blurb out of the way, let's take a peek here on the daily chart on IWM. Now, a little bit different than SPY. You're actually showing a little bit stronger momentum, as we just talked about how I use RSI, and your MACD is already flipping to the upside here. So actually looking like you could have a bull break here. Now, you should also notice basically gapped up the last 3 days in a row. Today also we gapped up. So you're seeing jumps in, like again, risk on activity the last 3 days, which is great if you're a bull in the market, because it's showing that people are willing to take that extra risk, to sound redundant, but it is. They're willing to take extra risk in the market right now to try to push the envelope and make a little bit more money with growth names, right? Or again, these story stocks that don't necessarily make money yet. Now this one's a little bit more interesting. If you're a bull, you're going to have a hard time here near term, but that's not a bad thing. And let me explain. Bulls, you're going to have to get through this dark blue line on my chart here. That's a 200 MA. That is at 215.18, which is an eyeshot today. Tapping that today is more than likely where you'll see some area of resistance. But getting over that, which again wouldn't be easy, but getting a hard break there with volume could lead to a momentum shift, a stronger momentum shift than we're already seeing in IWM. Now, again, to be said, that is an area of decent resistance. It will be, and it will act as a pretty hard line resistance, but breaking that leads you into the golden pocket here. In the golden pocket, this is for a fib retracement from the all-time highs to that tariff low. And that golden pocket number, or that pocket, is 216.21 through 218.52. Another area in which could be treated as resistance. So, if anything, unless volume comes in near term, this is actually leaning more bearish. Now, with that being said, the way the whole market's sitting, and the way sectors are sitting, the way I'm looking at things, the way volatility's sitting, I'm actually more on the side that we're actually going to break through this and power through this. However, I think what we would see, or was the more likely case, is to break up and get a wick and consolidate in this range above the 200 MA, but within the golden pocket here, before getting a continuation rally to this 223.32 area. Now, with that being said, that will be what we're looking out for as a bull. As a bear, I kind of just already talked about it, but you've got these areas on which you could get a decent rejection as a bear. Now, if we do get those rejections, what are you looking for? Well, we have a few decent areas of support and resistance just below here, but we also, to be fair, have technically 3 gaps: to the daily gap on today, yesterday's gap, and the gap prior, which is going to lead you down about 5 points on the IWM, or roughly, what is that, 2%, 3%? Downside here on the IWM, and getting back into a similar consolidation range that we saw in SPY. So these two are moving very similarly today, or in general recently. However, I would say IWM is moving more aggressively to the upside, especially that we're seeing these gap ups continue on the Russell. So your bear case here is getting a rejection again to the 200 MA, or in this golden pocket, where bears could look for an opportunity. Now, longer term bear, so that's your little short term bear thesis, because I feel like a long term bear and a short term bear are two very different people. If I'm a day trader, I could shade short and not be bearish long term, but if I'm more of a long term bear, I want more of a succinct idea of what to look for longer term. The long term bear, you're going to want to kind of hover in this range here of getting above this, getting around this 211.28 area and this 213.97 area. Kind of sitting there for a little bit before firing to the downside. On the weekly chart, this is also sitting at the 50 MA. So you have a weekly resistance and a daily resistance, with the 200 MA on the daily and the 50 MA on the weekly. So you do have an area that this is going to be a strong resistance to, but again, getting over it could be could be very positive for the bulls. But as a bear here, you're going to want to stay sub this 50 MA on the weekly, and really not go too much further here on the monthly. You don't want any more momentum coming out of this monthly chart. You really don't want to close above this monthly high from 331, that 215.48, which we're in earshot of here. As a longer term bear, you do not want to have this monthly candle close over that level. Now, there's plenty of time left in the month, and this weekly, like I said, you're sitting right on that 50 MA. I'm sitting in the camp, again, more 75-25 bull than bear, but it would be disingenuous to name the segment the bull and bear and not give you the bear part of the segment or the bear risk here, either which way. So I do believe for both SPY and IWM that there is a bear opportunity short term, but longer term, things are leaning more bullish than bearish. So guys, that was the bull and the bear for SPY and the IWM. Hope you found this video helpful, and don't forget to like and subscribe.